Good morning. Good morning and good afternoon from wherever you are listening to us across Africa. We welcome you to this webinar that will be discussing agriculture SMEs diagnostic, the results of that, as well as how SMEs have fared on during the COVID-19 lockdown situations in the country. For this particular webinar, we have about 105 people who've registered to attend, and I can see quite actively that we have quite a number of people who have already checked into the meeting. I see Wilfred Chepkwon, thank you very much for joining. Felix Rapodo, Robin Shaman, Thomas Oswald, Victor Mugo, and the number is growing even as we continue. AGRA as a Pan-African institution is cognizant of the need for sustainable development. We are awake to the fact that private sector growth is one pathway towards sustainable access to markets for farmers, as well as inputs. As such, the well-being of SMEs is important at a continental, at a regional, and at a national level. To this end, I encourage you to visit the AGRA website and download the local recently released agribusiness status report that basically interviewed CEOs across Africa, and they gave their perspectives about how they were able to manage the COVID-19 pandemic. As you are aware, please also subscribe to the AGRF newsletter, and in particular for SMEs that are represented in the room, please make sure that you sign up to release to access news and updates from the AGRF deal room. For our sisters, mothers, aunties who are in agribusiness, please visit the Value for Her page and learn more about how AGRA promotes women in agribusiness. For today's session, we will take a deep dive into the issues affecting agriculture SMEs in Kenya, as well as how, and we will also discuss how they fared during the COVID-19 pandemic. We will have a presentation from the Chief Operating Officer of the Kenya National Chamber of Commerce and Industry. We'll also have a presentation from the policy expert from the Kenya Private Sector Alliance, as well as hear from a woman who is in business, Madam Lucy Mushoki, who is the CEO of the Pan-African and Agro Industry Consortia, as well as the coordinator of the Kenya Agribusiness Alliance in Kenya. As we get into the presentations, please feel free to write your comments. There's a Q&A session as well at the end, and I'm sure that I will be able to raise all these questions during the Q&A. To start us off, I would like to introduce Dr. Patrick Nyangweso, who is the Chief Operating Officer of the Kenya National Chambers of Commerce and Industry, and in particular, he was a program manager in charge of the Kenya Agribusiness Diagnostic that was undertaken early this year with the support of AGRA, USAID, and PIATA partners. Patrick, I welcome you for your presentation. Patrick, I believe you're muted. Please unmute.
Thank you. Sorry for that. Thank you so much, Mr. John Macharia, the country manager in charge of AGRA operations. We really appreciate your partnership. And as you have introduced me, I work with the Kenya National Chamber of Commerce and Industry. I don't know how much time is allocated for me, but don't hesitate to alert me if I go overboard. And at this point, I would be very happy to welcome all the viewers, the followers, the panelists, so that I make this presentation and you will be able to support me or to come up with the constructive suggestions on the way forward. Welcome. Now, as you are aware, the Kenya National Chamber of Commerce and Industry, our major focus is to support SMEs in the country. We are able to work closely with the AGRA through the support of USAID to take this support to the next level, and we are able to reach more than 6 economic blocks, that is close to 40 counties. In this engagement, we work closely with the other private sectors and also the county governments, other county players, especially other BMOs, private sectors, development partners who are able to support us to reach out on several SMEs just to understand the challenges and opportunities, challenges facing them and opportunities that presents to the SMEs, which we can concretely utilize to really support them going forward. This growth potential, coupled with the recently signed Africa Continental Free Trade Area with a combined gross domestic product of more than US 3.5 trillion, provides opportunities for consumer and business spending, led by a very vibrant private sector. As Chamber to reshape the agricultural sector and trade in Africa, we really call upon all stakeholders that we must really focus on 3 areas. One is intra-African trade, agribusiness, innovation, and agricultural financing, which is very, very essential. Boosting African agricultural trade will not only help to generate jobs for women and youth in agriculture value chains, but will also raise the revenue and improve food security and nutrition. Now, there is, for us to really have this, there must be concerted effort for all the African countries to embark on greater and more diversified agricultural trade, both at the regional and global. And even back in the country at the national level, we must really focus on strategies that will boost productivity at all stages along the value chains in order to transform our agricultural sector, improve on export, provide adequate incomes, and stimulate growth. As we do this, through the study, our partnership between the partnership between KNCCI and AGRA, I'm very confident that we have provided a very good framework and also evidence-based findings, which would really continue to address the challenges that agribusiness face in this country, and to a stronger business culture in the regional economic blocks that will contribute towards agribusiness initiatives. We must really focus this because you have seen with the devolved structures, the major operations, especially focusing on agricultural growth and transformation, is geared towards transforming the economies at the county level. And therefore, working closely with the county governments, as you are aware, agriculture is a devolved function, is very essential in this race. I would touch briefly on gender in agribusiness. And in our study, I would just give you highlights. The respondents by demographic, you can see we're able to reach around 33%, that is for the women and youths between the age of 31 to 40 years. And I must really congratulate Madam Lucy Michoki, wherever you are, as the panelist, for really supporting us to really reach out in all the economic blocks. And we must really appreciate the effort you had put in this together with Mr. John Macharia. Now, for between 41 to 50, you can see it was 28%, above 51, 23%. In fact, our major focus was the productive age. And as you are aware, the agriculture is majorly practiced and the farms are owned by what we call the cohort 6, that is 65 and above. And I would share with you some of the challenges which this really presents to us. We need therefore to incorporate, based on the data I've just shared with you, an inclusive agribusiness, an initiative that will explicitly incorporate the low income and disempowered individuals. And the groups, especially to put emphasis on the cooperations for the enterprises in a way that creates value for both. For Chamber of Commerce and Industry, in our capacity to bridge the gap and address the gender imbalance in agribusiness sector, we have come up with programs that seek to address this. Especially, recently we established a strategic partnership with the Mastercard Foundation just to support the SMEs, especially the micro ones, so that they would be able to rebound back to their businesses. And we do this by giving them some credit facilitation of around 30,000. And I must really appreciate Madam Lucy, courtesy of your effort. We have really reached on to several SMEs in the country. With working capital and liquidity through credit facilities, we also were planning to offer grant, at least so that even they can buy inputs. As you are aware, we are in the short rainy season across the country, and our small and medium, micro farmers have really taken this initiative. The Juakali and the Hawkers Association, we are working with the most vulnerable groups, targeting both women and youths to really put emphasis on their robust economic growth. The Chamber has also partnered with the AMRET lately. In fact, as we speak, before I just came for this, I was going through a project agreement form where we want to really offer enhanced advocacy. It is called B4We project, that will support women business organization across all the counties. And we want to do this to build on the women-led enterprises. For the last 3 years, almost 2.5 years, we are in the 3rd year. We have worked with other development partners through the support of the European Union Fund, and in the Switch African Green project, which I have been leading for the last 3 years. We call it Green to Grow project, in partnership with the E4 Impact, Jomo Kenyatta University, and other players. That gives farmers a mileage in agribusiness in 3 agricultural value chains. That is mango, coffee, and dairy. And we have worked closely with the Ministry of Agriculture. You have seen the latest reforms, especially in coffee. We have released a policy guideline on this, how to reform this sector. And I'm very happy that the ministry is adopting that. Through the KNCCI Women and Youth in Business Committees, we have been able to do capacity building, access to life chances and opportunities. I would just highlight some few. Innovations and time in labor saving technologies. As we speak, we have been able to seek funding where we are going to offer the scholarship to more than 40 women-led entrepreneurs in the country, so that they can also add knowledge on how to improve on their business productivity. We are doing this through advocacy and enabling business environment by engaging county governments and other key stakeholders. On agribusiness value chains and the regional economic blocks, I want to share with you that the core of any economy is the ability of the economic agents to convert inputs. That's the capital, labor, and energy. The raw materials is really an issue. You have seen most of our industries are busy importing the raw materials. And I think if we really go join hands and support our farmers, I think it would be a thing of the past. So that we can only import technology, but most of the raw materials and other requirements that will see the growth of our industries can be gotten or achieved from our local sources. Productivity matters because it is the cornerstone and fundamental component in any of the economic success, as well as building the block that determines how fast an economy can grow. The other thing I want to give highlights on, it is better to share with you which are some of the economic blocks we were able to reach and work with. We work with the Jumia County, hiyo za Pwani. This brings 6 counties. That is Kwale, Mombasa, Kilifi, Tana River, Lamu, and also Taita Taveta. In Southeast Kenya Economic Bloc, this is Sekem. We were able to reach out Mekweni, Machakos, and also Kitui. Frontier counties, Development Council, we were able to reach Garissa, Wajir, Marsabit, and part of Mandera, and also Tana River is also part of this, and even Turkana, because of the shared economic resources. Central Kenya Economic Bloc, we were able to work closely. We reached out to Nyeri, Kirinyaga, Murang'a, Nyandarua, Kiambu, Embu, Meru, and even part of Nakuru. Then Narok, Kajiado County, there are just 2. It is called Nekem. We were able to also reach North Rift Economic Bloc. There are 8 counties from Turkana, West Pokot, Trans Nzoia, Nandi, Baringo, Uasin Gishu, and which one have I left out? I think, yeah, those ones. And also Elgeyo Marakwet. Then Lake Region Economic Bloc, there are 3, but so far there are 13. They have been reduced to 12. That is from Nandi, Busia, Kisumu, Siaya, Kakamega, Homa Bay, Migori, Kisii, Nyamira, and also not leaving Nini out, Bomet has joined also Economic Bloc. Research was conducted in 40 counties, as I stated earlier, and these are the counties which I've just mentioned in those economic blocks, because I work with all of them, so I don't need to read them. In all the regional economic blocks, the value chain corresponding categories were as follows: 20%, especially for inputs, the ones who had the challenge on the farm gates, that's 18% on aggregation, the value addition 18%, on the marketing and distribution 20%. Then the survey also identified the following areas that need intervention. One is the delayed payments by middlemen. We will only improve agriculture in this country and make it a commercial entity if we are able to deal with the so-called middlemen. Niwakora, it has really affected the sector. And I want to tell you, most of the small-scale farmers are not able to reap the benefit of their sweat. Low farm level productivity was identified as a key area for intervention. Poor road infrastructure, you have seen across the country, across the counties, this is a major problem, because you see, counties have not prioritized infrastructure as an aid to trade. Limited access to fertilizers. Inputs is really a problem. Kuna wakora middlemen. They want to really take leadership in everything. I would tell you for sure, 50 kg in Kenya for fertilizer, by the time we are doing this, we established it's costing 3,850 Kenya shilling. In Uganda, it's 2,350. In Tanzania, by that time, it was 2,050 Kenya shillings. Now you wonder, what is, where did the rent start beating us? Need for capacity building is really an issue. We need to really bring our small-scale farmers to speed to learn about technology, digital marketing, how they can do value addition, how they can access financial services, how they can work into groups so that they lower the risk. They can be able to manage other risks which presents this sector. Limited availability to affordable credit is really an issue. And on this, as Chamber, Bana John and the other panelists, I want to share with you without any fear of contradiction. We have partnered with other commercial banks like Equity recently. In fact, for the last 3 months, we have trained around 22,000 small and medium enterprises. And this includes even small-scale farmers, so that they would be able to understand on business modeling, how to do break-even point, how to even manage their finances, how to even acquire and improve on productivity. So need for government subsidy is really critical. I'm happy that with the e-voucher system, which is identified in the STGS, the government has come and is working now, identify Chamber of Commerce and Industry to help them map out potential beneficiaries so in all the counties. And they are doing some good job on that, especially on the provision of inputs. And reliable markets for key commodities. It's really a challenge. You have seen in the country, if you walk around Kirinyaga, sometimes they have high harvest, especially when it comes to tomatoes and other products, and it is very difficult even to transport them to the market, to get the ready market because of the perishability of these products. And the Chamber is working with other like-minded private sectors to ensure that farmers will be able to do value addition. Farmers would be able to get access to the regional markets, especially if it were not for COVID, through the regional expos and trade fairs, so that they would be able to identify the other potential markets rather than the traditional markets in the country. Need for favorable trade policies and cycle market prices. We need to have robust policies, which would, if you read the national trade policy, it identifies some of these areas for the support. But as private sector, we really need to come in full force to engage the government so that we continue to have favorable trade policies that would be able to sustain agriculture. On interventions and recommendations, as I continue, I would give highlights based on what we're able to learn from the respective economic blocks.
Yangoso, about 5 minutes. 5
oh,
minutes,
wonderful.
5 minutes.
Do it very fast. Now, on in Lake Region economic blocks, you can see we were able to engage the ministers or the head of agricultural departments in the counties. You can see we were able to
Nyangweso, you might be on mute. Bwana CEO, you might be on mute. We can't hear you.
business development in Kenya. There is sufficient room for additional access to intervene, to really scale up and also improve the level of technical assistance. In order to establish a Smes,
Hi, Patrick. It seems like your internet is intermittent. Is it back again? I can see you smiling. Is it back again? Okay, I still can't hear you. I don't know if it's my end or yours. Perhaps we could actually, I could just summarize some of the things that you just said. I'm sure there are quite a number of slides after this one that get into the specifics of what each economic bloc wanted to say. But so that to give time to also Patrick Mayangi from KEPSA to speak, I would kindly ask you to unshare your screen first of all.
Are we together?
Yeah. Yeah, your internet is intermittent, so we couldn't quite hear you very well.
Okay, Sawa. Yeah. You asked me to go back to the public partnership. That is number 2.
No.
Yes.
Just wait a minute, Patrick.
Yes.
Just a minute, Patrick. Just a minute. I was actually asking, I wanted to summarize some of the things that you've said. I think number 1, you've said that the particular diagnostic was able to reach about 30% women, which is an indication that agriculture SMEs are still a predominant male-dominated, enterprise. You also indicated that there are not very many micro and small SMEs, or the ones that are there actually need quite some support around working capital and liquidity issues. You also indicated that the SMEs you were able to interview did indicate there a need to help smallholder farmers improve productivity so that they are able to actually access raw material that they can process to go to market. You did indicate that the SMEs indicated problems with infrastructure. I can think these are probably people who are buying and trading and processing of commodity. There are issues to do with access to credit, and I guess that has to do with working capital and liquidity. And there are also issues to do with trade policies, and I can imagine this still relate to around the cess issues between different counties as people are beginning to trade. I think it is also commendable that with the support of the Equity Bank, and I believe also the foundation, you have been able to reach 22,000 SMEs and provided them with training, perhaps on entrepreneurship and things like that. And this is fantastic. And I think you have emphasized the need for capacity building. Now, I will get back to you. I want us to give a chance to Patrick Mayangi from the Kenya Private Sector Federation to also talk to us about the results of what they found or how agricultural SMEs were able to cope with COVID. Patrick Mayangi, over to you, please. And you have about 10 to 15 minutes. Thank you very much, Patrick.
Thank you very much, John, and thank you, Patrick, for that presentation. It's my hope that I'm loud and clear because the internet this time can get erratic. Good morning, good afternoon to everyone. My name is Patrick Mayangi. I'm the PPD specialist at the Kenya Private Sector Alliance. I will just show you a bit of what we do at KEPSA and see how best we can support each other in the work with SMEs. I'll make my presentation in 15 minutes, and I'll keep to that or less. Introduce KEPSA and who we are and what we do, show a bit some of our results of 2 of our main studies we did, and then look at areas where we can work together within our existing programs where we work with our members. Moving forward is KEPSA is a membership organization. We registered in 03. It's the apex body of all the private sector bodies in Kenya. So we have members, corporate members, multinationals, trade associations, and then business member organizations. So all these, there's a list there, I can't go through all them, but all these are members of KEPSA. So it's coming together, bring all the members, all the businesses, associations together in one voice that we can adequately advocate with the government. We look to be the voice of the private sector in Kenya to ensure that year-on-year improvements in the overall business environment in Kenya. So we work with government and other stakeholders to ensure that we improve the business environment in this country. Strategic focus is one is to conduct high-level advocacy, high level at the national level mainly, cross-cutting policy-related issues. So we want to be at the national level and then do also cross-cutting policy issues. And then the other one is to coordinate the private sector in Kenya through various mechanisms so that we are not pulling in different areas, so we can coordinate private sector. So when we are talking, we can talk to Chamber of Commerce, Association of Manufacturers, everybody, so that we can come together as one voice. So we coordinate the private sector, and also KEPSA will work with the upcoming and new business member organizations and build their capacity to develop them to ensure that they can, adequately and sufficiently reach their mandates. We are organized in 16 sector boards, and they are listed here. So these mirror government ministries and main sectors of our economy in Kenya. So these are the main, you can look. Number one is agriculture, livestock, and fisheries, and all the other sectors are listed there, and including gender and youth and tourism and all. So all these sector boards are interdependent because there are matters in devolution that agriculture that touch also on security. So our KEPSA members can join any of these sector boards depending on their interest and their businesses. And then of course we work in sync or with each other to deliver on the good of the private sector in Kenya. Our main way of engagement is what we call the PPD platforms. The public-private dialogue platforms. I've made a pictogram on it. On the other side is just explain the two. So on the bottom is what we call the 16 sector boards, which I mentioned. And those will reach to, on the executive arm of government, the various state departments or government agencies, be it Central Bank or Kenya Revenue Authority. The next level is go to the ministerial level, that's the cabinet secretary level. So any matters, for example, if it's agriculture, we'll meet with the state departments of crops or livestock or whichever it is. Then next is the ministerial, the cabinet secretary. Then after that, there's what we call the NDICCC. In full, that's the National Development Implementation and Communication Cabinet Committee, which of course goes to the Presidential Roundtable. We also work along with the COG, the Council of Governors. We work also a lot with the Chief Justice on matters judiciary. The Council of Governors will deal with us more of devolution, and then the speakers roundtables of both houses of parliament, that is the Senate and the National Assembly. In our engagement, we ensure that we don't leave anyone behind. It's our motto for 2020 and 21 that leave no one behind. So we work with everyone. Most of this, you see that the sector boards, we have a directorate of MSMEs, micro, small, and medium enterprises, which again are embedded in all these PPD platforms. This year, we did a study, a survey that we did within ourselves, the MSME Policy Index. Ideally to look at the index, in 2019 to provide policymakers an idea of what's happening in SMEs, so that as they make policies, they have an idea where we are doing and what we have achieved so far, and what we could do to make it better. So this initiative was part of the KEPSA SME agenda and builds on what we call the Kenya Rising Star CRISP program for SMEs and enterprise development in Kenya. We made a commitment during the 2019 Presidential Roundtable that will support small and micro enterprises in Kenya, and this program was established and this policy index was made. So the idea is to foster development of a resilient Kenya economy by supporting SME development, nurture the enterprises, and expand opportunities for wealth and employment creation, which will now make Kenya even a better kind of economy for these SMEs. We, as KEPSA, again, we have facilitated, as part of our mandate, the formation of the Kenya National Federation of Juakali Associations. The chairman of this association sits in the KEPSA board to bring all matters Juakali to the forefront of our KEPSA work. And again, we worked with government since our formation to define and enact the Micro and Small Enterprises Act, which went on to develop a policy and regulatory framework for SME development in Kenya. So this SME policy index were created of 8 policy dimensions to look at how we can develop SMEs in Kenya. So across the policy space, legislation, regulations, programs, and the like. In early this year, and since the outbreak of this global pandemic, we worked closely with the government and to see how we can cushion businesses and especially SMEs against the adverse effects of COVID in Kenya. And so we did 3 surveys, one in March, April, and June, to understand how business has been impacted, and then identifying priority interventions that the KEPSA economic management framework can respond to. And we put these results to the government through our various PPD platforms from our ministerial or NGCC engagements. And around May, the government responded to our queries by making various economic stimulus packages. We saw the reduction of VAT, reduction of the income tax, and removing a bit of those fiscal measures that the government did. Also did a monetary measures, monetary steps through the reduction of the central bank rate, so that we can avail more liquidity in the economy. And since then we've done a survey in October, and we've seen the economy is improving well. This study was done in October to look at all the dynamics and options and opportunities that we can use in Kenya to accelerate growth and resilience so that we do not sink further due to the pandemic. We note that in our survey in October that agriculture has been significantly affected by the pandemic. We have grown from 60% to 40% as in October, from May to October. So we have there's a reduction in productivity in agriculture. And that for me is a point of concern, but we're working with government and other partners to ensure that we rebuild our economy. We just look at the opportunities that we identified from our studies, and one is there is a chance and opportunity to adopt online systems, digital marketing, and that we are really developing. We also see an opportunity to do virtual delivery using the normal M-Pesa payment, border, looking at all the architecture. We can use platforms like Trigger to do more B2C, business to customer support. And then we can work with various partners to support small businesses to adapt their models to digitize and also increase connectivity. And then also, the whole thing, use what exists in like Uber and Jumia to grow better. And of course, there is a youth and women focused growth that we are engaging and pursuing to do that. And then, okay, in the frontier counties, we worked with partners to have an index-based livestock and crop insurance, especially to look at the risks that are associated with the agribusiness. And of course, we have continued to do tech data, use data as our key point of source of information. We want to ensure that we fast-track the SME credit guarantee scheme. This was given as part of the executive order during the presidential speech must have been August. So we want to fast-track that to ensure that we can get a credit guarantee scheme for our SMEs. And then, of course, assist MSMEs to accept government opportunities like AgCo and sustain the reduced pay rates for SMEs. We've also done a lot of advocacy work with overtax issues with the Kenya Revenue Authority. There is now a dedicated directorate on SMEs at KRA, and that is now focused only on SMEs, so that we can see how we can make tax issues and policies only for SMEs. And of course, we continue to fight corruption in Kenya and wastage of national resources so that SMEs can benefit. We are running a program with AGRA, which is focused on technical assistance on agriculture sector board. And we thank AGRA for the continued support. Through their support, we made various policy and work advocacy wins. There are bunch listed here. I can mention a few, like the formation of the Agriculture Sector Network, ASNET, which is now working to bring all the agricultural bodies in Kenya together, and also linking with the academia and the UN bodies and other development partners to ensure that our agriculture sector is in one house. ASNET has worked a lot and it's been developing very well. Since it was formed early this year, we have seen a lot of good things coming. And the idea is to work with government to fully implement the agriculture sector transformation and growth strategy, the agriculture policy, all these regulations that government has put in place to ensure the agriculture sector is vibrant. And main focus is SMEs, SMEs, SMEs. We also want to work with the government, as I mentioned, to review taxes on inputs, especially on inputs of agriculture. And through our work, we have seen the reversal by the Kenya Bureau of Standards on PVOC requirements on seeds and animal and medicines. PVOC is pre-export verification of conformity, so that whenever they are conformed by the country of source, we can use that data. We don't require them to be done afresh in this country, which again goes towards improving access to inputs, quality inputs for our SMEs. We have in ourselves what we call SME COVID-19 Recovery and Resilience Project, where we have launched a partnership, a program in partnership with Mastercard Foundation to provide loans to MSMEs whose businesses have been affected adversely by the pandemic, and they are finding it difficult to access finance. It's a one-year project, and we want to support finance SMEs to increase their businesses and improve the market access. And they have two major components: it's business development and access to collateral-free loans. This is the specifics of that program, where we are giving loans at zero interest rates. No, we are not paying any money. So we give you $10, you pay $10. No collateral is required. The only collateral we need is goodwill, that you are a member of the KEPSA family. So you're a member of KEPSA itself or a member of a partner business member association. For example, if you're a member of Chamber of Commerce or Agricultural Federation of Kenya, then you come to that. We'll give you a loan of between 100,000 Kenya shillings to 1.5 million to be repaid back in 6 months with 1 month of grace period, and that loan can be assessed in that portal, smekepsa.or.ke. Unfortunately or sadly, only so far we have funded 9 businesses to about 2.91 million shillings, which is, we are trying to understand why SMEs are not still coming up. This is zero interest, no collateral, just give you money to work and all that. Who are our target people? Women, all women between 18 and 70 years, and youth, 18 to 35, who are, so it's women or youth-led or youth-owned. It must be an MSME, so up to 50 employees, and then you experience challenges, but you're making some profits, which gives and guarantees that you can pay. And you're a member of KEPSA either directly or through a BMO. And this is a call to all members in this call, and so we can partner together. We can tailor-make this financial product for our SMEs, and we need to do it quickly because it's still only 1 year ongoing. We also have a program called Sustainable Inclusive Business, again funded by the Kingdom of Netherlands, and founded on small businesses showing capacity, making sure that it's sustainable. And we want to make sure we can work together with all of you. So if we can get somebody come, we also give support these small businesses, youth-led SMEs, to ensure that we can grow them. And we have facilitated a special product for advocacy so that we can, all these legal frameworks can be entrenched in our agriculture SMEs. On this, my final slide, we have the AGRA Digital Progress project at KEPSA, funded by MasterCard Foundation, working with the government and the Ministry of ICT and Rockefeller Foundation to bridge the gap between skills demand and the jobs. So skills demand of employers and the jobs and what's available. See how we can connect these two things. Make sure that we have every job out there is on a digital platform. That's what we call AGRA, it's employment. And then to make Kenya, a freelance hub for a global destination by 2022. And we welcome partnerships to integrate e-commerce and promote our agricultural jobs and SMEs. We want to support SMEs in technology, includes the space, and also see how we can do marketing better on the digital platforms. Thank you very much. I know I rushed through it, but I do want to take a lot of time. Thank you. I submit back to you, Chair.
Thank you very much, Patrick Mayangi from KEPSA, for also the good work that you're doing to help SMEs cope with COVID. Just to summarize what I heard you say, number one is that KEPSA is actually having programs that aim at, speaking at the presidential level, the Senate, the Parliament level, on roundtables to ensure that the issues affecting SMEs actually get to the policymakers, and that is fantastic. I've also heard you say that from the surveys that you've done, about 60% of the agriculture SMEs have shown that they have been impacted by the COVID pandemic, either because they cannot be able to access raw materials because of the closures that were there and things like that. And as a result of that, you have seen an increase in adoption of digital technology. So there's a lot of digital marketing, there's a lot of delivery of services. So you gave an example of Trigger, and you have also helped introduce the index-based insurance that I think basically provides some form of relief to smallholder farmers in different value chains. Besides that, you're working on the access to finance side, and in this regard, you're actually trying to make sure that the SME credit guarantee scheme that was set up by the presidency is working. You're also working on the tax issues that are affecting SMEs quite broadly in the country. I know there's quite a lot of reimbursement tax that needs to be sorted out. And in the year, you have been able to successfully advocate for the reduction of taxes around inputs, agricultural inputs, and that is quite fantastic. You're currently partnering with the MasterCard Foundation around providing a COVID-19 recovery and resilience project that is providing 0% interest and things like that, and that is fantastic. And I like your presentation because everything that the Kenya National Chamber of Commerce was able to identify as issues that the SME, the agricultural SMEs are having at the county level, KEPSA is able to take these issues to the national level and also to partner with different partners to try and find solutions to some of the issues. I, however, have one question from a panelist, and this has to do with one of the sides that we're not hearing much about. And Patrick Nyangweso did mention that one of the issues that smallholder farmers and AgSMEs are having has to do with brokers, and the panelist is actually not the panelist, an attendee is actually asking, what is the solution to middlemen? That's part one, and part two is how do we help induct or actually make better use of middlemen in different value chains? Patrick, you could venture an answer to that, and perhaps Nyangweso could answer as a follow-up point. Please go ahead, Patrick Mayangi.
Yeah, thank you very much, John, and thank you for the attendee who asked that question. Yes, brokers and middlemen are here, and to start in, they are in our economy, they are part of our system, and I don't know, I really have no answer to that. One thing we must understand is that middlemen serve a role. They meet a need that we do not meet as producers or as consumers. So they are trying to bridge that gap. And so long as there is that issue, potatoes are grown in Kinangop, but consumed in Nairobi. The farmer in Kinangop does not want to travel to Nairobi, then there's somebody who will do that. They sell information. They sell logistics. They sell, they provide something, a service. We may think they are really wrong, but they're doing something for the value chain. And I mean, I don't think we can ever exist fully a value chain where the farmer supplies the consumer 100%. So we need some form of middleman. And that is part of the economics of agricultural markets. Our point is there may be too many middlemen. There's one like 5 in Kinangop, on the road there are 10, then when you get to Nairobi, Wakulima market, there are many various others, that by the time you reach to your shop or supermarket, the price has increased 100-fold. So what we do and what we have tried to work even with the Chamber of Commerce and our partner is, if farmers can come into groups and associations where they can form, commercial groups, viable groups, where they can supply directly, then we can remove a bit of middlemen in the chain. That for some reason or the other, many farmers do not want to be in cooperatives. So they want to do alone because cooperatives can be slowed down. So you want to sell direct. So it is not an answer we can get now out, but we can work together slowly to get farmers into bulking centers, getting a better price, working with our retailer side, and the Retail Association of Kenya is a member of KEPSA. We can work with them to see how best we can go back the value chain to reduce the number of middlemen, but not to remove them altogether. Thank you, John.
Okay, thank you very much, Bwana Mayangi. Bwana Nyangweso, are you with us? Are you still with us? How is KNCCI proposing to, deal with the issue of the numerous middlemen that
Hello?
we have? Yes, Nyangweso.
Hello, John. Yeah, you are able to hear me?
Could you put your camera on? Yes, we can.
Quick one. I like how Mr. Mayangi has just made it. Now, it is true we can have solutions to address the manipulation and of middlemen. One, how to support this? He has just highlighted about cooperative society. For the brokers, for us to support the small-scale farmers so that they derive the benefits, the perceived benefits from their produce, we need to encourage and put emphasis during before you were born, JM. We learned a lot in the books of agriculture and history. Cooperative societies were very strong. When we were conducting this survey, in fact, all along with even under European Union, the one I just shared with you, that project, we were able to engage some of the cooperative society. It is an answer to support and address the issues affecting the small-scale farmers. So one thing, we need to work with the government, especially county governments, to put more emphasis on cooperative societies and leave them open so that with a little restriction so that farmers would be able to join. Another one is supporting the small-scale farmers to come up with a robust marketing strategy so that they are able to identify, and this is where both KEPSA and KNCCI must come in handy, even through the ASNet, so that the marketing strategy model, a farmer in Kindago, for example, a farmer uko in Kisumu would be able to know that there is already a market for my fish, instead of selling it at a throwaway price because you are incapacitated, or a middleman will tell you, I want to go and sell it in Mombasa and bring you money, then you have other options through a developed marketing strategy. A quick one is a cooling plants or the stock warehouses. Let the government construct warehouses at the county level. If you go along the beaches, people really sell their fish at a throwaway prices. If you go to cross borders, go to Busia, come to Bungoma, go to Trans Nzoia, go to West Pokot, which is now producing very quality sweet potatoes. They sell them at a throwaway price because there are no warehouses where somebody can now link up with John in Nairobi, get a market, then they organize for a pool transport system. That is another strategy. We need to encourage farmers or even the value chain players to come up with a pool transport system, which Mr. Mayangi has talked about, where groups come together. They can even be supported with these loans they are getting. They get one truck. If you are trading in tomatoes, you have identified a market in Nairobi, you are able to do this. The last one is value addition system. We really need to plant this sense to the farmers that you will only drive the benefit if you add value to your products. And through this, we are going to reduce. So government must come up with a policy. I was in Kongowea market 3 weeks ago. And John, I saw how people really don't get the value for their produce. The people who derive a lot of benefits are the so-called brokers. They are just waiting for the trucks at the gate. When you arrive there, they tell you, we'll be able to sell this for you at the, they set the price, unit price. So it is like every day they define the unit cost of a sack, and you are at their mercy. So I think county government must really streamline this together with the national government. We together through the ASNET forum need to do this. Thank you.
Thank you, Nyangweso. I have a question from one of the attendees that is actually very particular to KNCCI. And the question is, I know you talked a lot about what KNCCI is doing as an institution, and I think we started losing you when you started getting into the specifics, the specific findings of the diagnostics. In one page or in 2 minutes or in 1 minute, as it were, could you tell us what are the specific bottlenecks that SMEs, AgSMEs in Kenya identified as the major constraints as to why they are not able to grow, why they are not able to be able to scale? You can choose either one regional economic block, or you can choose to actually show us one summary slide of that particular diagnostic report. Patrick, please.
Yes, as I've lost my slides, but I know them often. If you allow me, I can give a broader summary. Yeah, without showing the slides. Or should I look for the slides? I show them.
No, go ahead. Go ahead.
In terms of priority, Brother John, is very clear. The key impediments to the growth, especially of the agricultural value chains, as far as the small-scale farmers are concerned. One is the incentives from the government. John, you and the rest, you are aware that in 1970s, 1960s, and even early 80s, through Agricultural Finance Corporation, farmers used to get affordable credit. Credit has become unmanageable before even the current president came in to cap it at 14%. Other banks were charging 23%, and therefore small-scale farmers opt to even use old technologies, so that even mechanization of farming has really become a problem. The second thing is the marketing. Market opportunities. You have seen during the COVID, even designated, having a very supportive designated market was really a problem. Counties, I think we hurriedly devolved agriculture under the 4th schedule. We really need to come up with the strategies to support and improve market infrastructure for the farmers to be able to get the safety in terms of marketing. They are able to keep their produce as they look for the markets. Another thing is the research. The research element, imekufa, is died. Look at, I don't want to go deep into specific value chains like tea, coffee, these other maybe beans. The research is very key. Let the farmers get the right information, the current findings, which would be able, in terms of which inputs, we need to see strengthening these research institutions to provide the right information to these farmers. Another thing is the warehouses, which I think I've talked about. Then key also to the impediments, which we really need to, is the policies. Let the county governments, the national government come up with a very sustainable policies. Look at the extension officers before I forget. At the county level, this is a service which died. Some county, okay, Kiambu is doing very well, I think, through the support of AGRA and also other institutions, the VBA, the village-based ambassadors. This one has proven to be practical, evidence-based. It reaches the farmers and guide them on the best practices. Look at the smart farming. Those are the things which we really need to take to the local, up to the village level, support the farmers. We need to work. John, you are with me at Pan-Africa. Even the CECs of agriculture, they were able to confirm to us that there's the funding, the budget level of agriculture is less than 6% in a financial year. And therefore, it becomes very difficult for them to recruit extension officers. The last thing I want to talk about is the market access, especially the global one. We need to really link up these producers to the global market so that instead of them just selling to the local consumers who also have the same produce, and Chamber and KEPSA, this is your priority. Let's lower the cost of production. Look at the tariffs charged by the Kenya Power. Recently, John, 2 weeks ago, we met here the MD of Kenya Power, and we are coming up with a robust program to go to the counties. We must have alternative energies. We cannot advocate for value addition if the cost of production is high, my brother. We are not going to support the farmers on this. So I think that also with making this sector competitive is also very key, and we must work closely, all the stakeholders, to ensure that agriculture becomes competitive. Thank you.
Thank you, Patrick. Thank you, Patrick. Now, we are 3 minutes past the hour, and I want us to finish exactly by in the next 5 minutes. Just one last question. 2021 is the year of food systems, and there are a lot of food systems dialogues. In about 30 seconds, Patrick, please tell us what, in your view, you think needs to change in food systems in Kenya for AgSMEs to be more sustainable, commercially viable, and we start seeing them expanding. Patrick, Mayangi, we could start with you.
Yeah, thank you. Yes, my internet is slow, but I'll be there. So food systems, for me, we need to work a lot on the value chain, the food value chain. So whether it's production, so we need to do advocacy from the production bit, so that at the farm level, we can increase production, and it's possible. We're especially working with ASNET now at the production level. So if it's input taxes, reduction of any duties and levies that go into inputs, so that we can increase our productivity. And then we need to improve on our distribution. Distribution is good. We are very food scarce areas in this country, this Kenya country. So distribution, why do we have some bananas rotting in Nyamira, while in Kitui farmers, people could use those bananas? So the distribution channels could really improve the incomes of farmers. And then, like Patrick, my colleague, said, is the value addition processing and all that. Some of the produce is so perishable, we need to make sure that there's some value addition done at source. So that we can measure that. But Kenya today could be food secure just given to that. So the food system needs to be done an overload from the production to the farmer inputs, the final selling at the table, where it's a restaurant or at the household. So we need to make sure that we have enhanced the whole food chain. There's a lot that can be done, and we are doing that as KEPSA, working with the government and ensuring that things, the law and environment is good, but also our members who are in food production and food processing, the likes of Bidco, Trigger, and all that, they are really doing a good job, and we work with them to ensure that they can reach out to the farmer, source their raw materials from these cooperatives, and ensure that the system is good. Yeah, Patrick Nyangweso, please over.
Thank you very much. Patrick Nyangweso, 30 seconds.
Make it 20 seconds. I think one thing which I would add which I would really advocate for, which we really need to come together. ASNet is doing wonderful work, and tomorrow we'll be launching the strategy, I think, for the next 3 years. So let's lower the cost of production for the animal feeds. This one would enhance on quality and productivity. We need to continue working closely with the government to enhance on the e-voucher systems. Let the farmers really realize the support in all the counties. And also another thing which we need to focus on is insurance system. Well, there is a way we can work with the development partners to ensure that look at the wheat growers in Narok, for example, so that, because you see the climate change is so much unpredictable, so that most farmers end up investing a lot and they really cry foul when the dry spells comes in. Then irrigation system. Let's work with the government to lower zero rate most of the irrigation equipment, to ensure that even a small farmer who wants to grow maybe 1 acre of tomatoes would be able to get to those equipment and improve on productivity. Then the last thing is extension services. There is no way out we are going to support. I've seen most counties bought even tractors. There are several tractors at the yards when you visit these counties, and they are not supporting the targeted audience or the farmers. Let's work with the extension officers. Let's continue with the VBA system, like what I've just mentioned. I've seen it working in Kiambu County. We can scale up this, John, to the next level, and let's have a very robust training framework where women and youth will be able to be brought back to agriculture. Let's make agriculture youth friendly so that we will enhance on production, not the cohort 6. So that even land system, we can work with the government to come up with policies. Let them allocate land to the young women, the young youths from the colleges, and we support them. I'm very happy with the BBI. It has given a grace period of the youth who have started their business for 6 years grace period. If it goes through, it will be very supportive and it will create a lot of impact. Thank you so much, John.
Let's not go to the BBI. So thank you very much. I think all attendees, in summary, with the COVID-19 pandemic, what we've seen is that there has been a lot of focus on short-term solutions. And what this particular webinar begins to present is that for us to get the AgSMEs where they need to be, there are quite a number of systemic issues that we need to be thinking about. One of which is access to credit. And if we had more time, it would have been good to hear from Patrick Mayangi of KEPSA, why after setting up a COVID relief fund, we only have 9 AgSMEs that have been able to access 2.1 million. Whereas you'd imagine that 100 or 200 or 1,000 have been able to access the fund. There's an issue around uptake. And that speaks to the fact that, you know, is it an issue to do with AgSMEs and how they're structured? Is it an issue to do with the certainty of markets or the certainty of access to raw materials? But there's certainly work that needs to be done around agricultural policies and how they create an enabling environment for private sector. There's also a need to enhance a lot of the support services, one on the capacity building side, but two on the development of tools and products that actually make agriculture viable, such as agricultural insurance, such as issues to do with mechanization. As an institution, as AGRA, we are concerned and we are indeed happy to not only help the private sector in Kenya, such as KNCCI and KEPSA, but also to work with government to try and help unlock some of these systemic issues, not just in Kenya, but across the globe. So I really thank you for my panelists for attending. Unfortunately, Lucy was not able to join us, but a lot of what you said actually speaks to some of the things that I know she's passionate about. I would like to thank my colleagues from AGRA who were able to join. I would also like to thank Martin Fowler from USAID Uganda, who was able to join. I've also been able to see colleagues from Equity Foundation, Jacqueline Chepkoech. I've seen Fred Ogana from East Africa Market Associates, Victor Mugo, you know, the Mr. Agriculture, I believe. And I've also been able to see Julie Karaoke from TechnoServe, Charles Wairia, David Wanjohi from Ernst & Young, and quite a number of others. And I think let's keep this conversation going. Let's have another discussion as we get into 2021. And please remember to sign up for AGRF. please remember to sign up for the agriculture deal room that is hosted by the AGRF under AGRA. Thank you very much, and do have a good afternoon. Thank you.